1. Start with energy. Explain with authority. Highlight with emphasis. End with warmth. Right now, the ticker symbol YYAI, AiRWA Inc., is flashing a perfect $1 flat, 1.00 on the live tape. We are looking at a gain of roughly 7.3 cents, or a solid 7.82% move to the upside in today's session. This is a psychologically critical moment. The stock is fighting tooth and nail to reclaim and hold the $1 compliance level, a barrier that often acts as the demilitarized zone between investable asset and penny stock purgatory. The order book is lighting up with rapid-fire executions, suggesting a battle is raging between day traders flipping for pennies and a newer class of buyers who are positioning for something much bigger. The expectation here, what the average retail trader sees when they pull up the chart, is a classic dead cat bounce or a desperate pivot from a company that used to be Conexa Sports. The skeptics look at the history, the massive price erosion from the 52-week highs and the recent name change, and they write this off as just another microcap trying to ride the latest buzzword wave. They think this is a shell game designed to trap liquidity before fading back into obscurity. That is the expectation, a failed sports tech company grasping at straws. But the reality? The reality is that AiRWA Inc. is positioning itself at the absolute bleeding edge of the single biggest trend in financial markets for the next decade, real-world asset tokenization, or RWA. While the market is distracted by the volatility, AiRWA has quietly secured a $30 million war chest, not in cash, but in Solana tokens, to build the liquidity infrastructure for a new exchange. The reality is that they aren't trying to build another Robinhood app for stock traders. They are building a bridge for the millions of crypto natives who want exposure to Tesla stock or Nvidia stock without ever leaving the blockchain. They are solving the off-ramp friction that plagues the crypto industry. The market sees a penny stock, the smart money sees a potential first mover in the multi-trillion-dollar tokenization of the global equity market. Let's dissect the intraday action because it confirms this hidden accumulation. The stock gapped up and is holding the gains. Usually, with a stock like this, you see a morning pop followed by a fade as bag holders look for an exit. Today, we are seeing the opposite. We are seeing a flagging pattern right around that $1 mark. This indicates that every time a seller steps in to offload shares, a buyer is there to absorb them. The volume is ticking up, and it is not just retail noise. There is a systematic accumulation happening here, likely driven by the realization that their partnership with JuCoin gives them immediate access to a user base of 4 million people. Think about that. SoFi and Interactive Brokers spend hundreds of millions in marketing to acquire customers. AiRWA is getting a 4 million user pipeline effectively overnight through this joint venture. Now we have to talk about the pivot because it is the elephant in the room. Yes, this company used to be Conexa Sports. They made tennis ball launchers and analytics tools. It didn't work out. The stock got crushed. But unlike many companies that just slowly bleed to death, management pulled a hard break and pivoted to where the money is going, RWA. They rebranded to AiRWA Inc., AI for artificial intelligence and RWA for real-world assets. The expectation is that this is just branding. The reality is that they are actively deploying technology to tokenize U.S. equities. This means taking a share of Apple stock, locking it in a custodian vault, and issuing a digital token on the blockchain that represents that share. This token can then be traded 24/7, instantly settled, and used as collateral in DeFi protocols. This is the holy grail of finance that giants like BlackRock and Fidelity Investments are talking about, but AiRWA is actually building the retail-facing exchange to do it now. The choice of Solana is critical here. If you're using Ethereum, the gas fees make trading a $10 stock impossible. You'd pay $5 just to move it. But Solana? It is fast and it costs a fraction of a penny. This technical decision proves that AiRWA isn't just throwing spaghetti at the wall, they understand the microstructure required to make tokenized stocks viable for the masses. They aren't trying to compete with Schwab Intelligent Portfolios for your retirement account. They're competing for the degen liquidity, the billions of dollars sitting in crypto wallets that want to diversify into the stock market without converting back to fiat currency and waiting 3 days for an ACH transfer. I want to pause here and get your take on this because it's a polarizing topic. Comment below. Would you trust a tokenized version of a stock on the blockchain, or do you strictly prefer holding the traditional shares in a Fidelity brokerage account? I want to know if you think the tokenization narrative is the future or just hype. Let's look deeper into the JuCoin partnership. This is the catalyst that the algo traders are likely missing. JuCoin is a major player in the crypto exchange space. By partnering with AiRWA, they don't have to build liquidity from scratch. Liquidity is the bloodline of any exchange. If you go to buy SoFi investing products or trade on interactive brokers trading platforms, the liquidity is there. For a new exchange, it's usually a ghost town, but by plugging into JuCoin's ecosystem, they solve the cold start problem. This deal involves a $500 million definitive agreement to launch the AiRWA exchange. The sheer size of these numbers, $30 million in Solana, $500 million in joint venture value, is staggering for a company trading at a market cap that suggests it's worth peanuts. This divergence between market cap and deal value is the inefficiency we're exploiting today. However, we must respect the risks. The expectation of regulatory hammers dropping is very real. The SEC has been incredibly hostile toward crypto assets that behave like securities. Well, tokenized stocks are securities. There is no gray area there. AiRWA is walking into the lion's den. The risk is that the regulators shut them down before they even get started. But here is the counterpoint, the reality shift. We're seeing a changing of the guard in Washington. The political winds are shifting toward a more pro-crypto stance. If we get a regulatory framework that allows for tokenized equities, AiRWA is positioned as one of the few pure-play public stocks you can buy to bet on that outcome. You can't buy shares of Coinbase and get direct exposure to an RWA exchange launch like this. You can't buy Robinhood stock trading and get this level of leverage to the RWA theme. AiRWA is a call option on favorable crypto regulation. Let's talk about the technicals again, because the $1 level is more than just psychology. It's survival. NASDAQ requires stocks to maintain a bid price of $1 to remain listed. By trading at $1 today, AiRWA is fighting for its listing life. If they fail, they go to the OTC markets, the pink sheets, where institutional money cannot follow. But the recent 1-for-50 reverse stock split was designed to cure this. It reduced the share count and boosted the price. While reverse splits are usually bearish signals of distress, the expectation is that it was a necessary surgical procedure to clear the deck for the new business model. The reality is that with a tighter float, fewer shares available to trade, any positive news catalyst can send this stock parabolic. We have seen this with other low-float runners. When demand spikes and supply is thin, you don't get a 10% move, you get a 100% move. Comparing this to the landscape of online investing, we see a fragmentation. Fidelity Wealth Management and Fidelity ETFs are capturing the passive money. Robinhood and Webull captured the active retail trader. But who captures the crypto native who wants yield? Right now, that money is stuck in stablecoins. AiRWA is building the pipe to drain that liquidity into the stock market. Imagine a world where a trader in Seoul or Dubai can use their Solana wallet to buy fractional shares of the S&P 500 at 3 a.m. on a Sunday morning. That is the vision. The stock market is currently open roughly 6.5 hours a day, 5 days a week. Crypto is 24/7. AiRWA wants to bring crypto hours to stock assets. The financials here are opaque, which adds to the risk and the opportunity. Because of the pivot, the historical earnings of Conexa Sports are irrelevant. You can throw them in the trash. We're effectively looking at a pre-revenue startup that happens to be publicly traded. This makes traditional valuation metrics like PE ratios useless. You have to value this like a venture capital bet. You're betting on the total addressable market of real-world assets. Citicard estimates the RWA market could be worth $4 trillion by 2030. If AiRWA captures even a fraction of a percent of that, the stock is mispriced at $1. But let's look at the downside scenario because I promise to be your smart friend, not a cheerleader. If the platform launch is delayed, or if the test runs turn out to have security flaws, this stock could retest the 50 cents level. The crypto space is rife with hacks and exploits. If the AiRWA exchange gets hacked on day one, it's game over. Security is paramount. They have announced partnerships with security firms like Inca Digital to bolster their framework, which is a good sign. It shows that they aren't just copy-pasting code. They are building institutional-grade defenses. This is what Interactive Brokers would do. It's what Fidelity would do. AiRWA is trying to signal to the market that they are grown-ups in a room full of kids. There is also the Solana beta angle. Since they hold $30 million in Solana tokens, the company's balance sheet is now directly tied to the price of SOL. If Solana rallies, AiRWA's book value increases. It acts as a proxy. If you can't buy crypto directly in your individual brokerage account because of restrictions, buying YYAI is a backdoor